Hi, everyone. Welcome to today's seminar about cryptocurrency. So when I mention cryptocurrency, I think the first thing everyone would think about is Bitcoin. So undoubtedly, Bitcoin has gained lots and lots of popularity over the recent months. So then, over the recent months, Bitcoin has went up, skyrocketed. So you can look back in 2011, where Bitcoin, no one knew what it was. Back then, it was garbage. It was worth $1. No one wanted it. Someone used like a few hundred Bitcoin to buy a pizza. Well, that few hundred Bitcoin now, each of them is worth almost $50,000, where I found before COVID, it was around $10,000 each with a high of 20,000. During the COVID-19 pandemic, the beginning, it dropped to almost around 4,000. And recent months, it shot up like crazy, up to almost $60,000 per Bitcoin. So you can see that the popularity has gained so much, but why? So let's talk about what's cryptocurrency first. So cryptocurrency is a type of digital currency in which the transactions are verified and recorded by a decentralized system using cryptography. So in other words, that means that there's no central government. It's all recorded in a series of computers, lots and lots of computers.
So now we know what cryptocurrencies are. Now we have to learn how cryptocurrencies work. So first of all, unlike stocks, legal tender, or commodities, crypto is not an asset that is managed by a central organization, such as a bank or a government. Instead, Bitcoin is traded via blockchains, which is a decentralized network of private computers that tracks everyday crypto transactions. Cryptocurrencies are mined by using powerful computers to calculate what we call a hash to virtually create a new coin. Uh, the hashes and mining are very complicated, so we won't get into that for today. And third of all, cryptocurrencies are virtually untraceable. Every transaction of a cryptocurrency is made public for everyone to see on the blockchain. However, the users stay completely anonymous. So what's all the rage of Bitcoin and cryptocurrencies lately? Here are some fancy news outlets that we can see. Here are some recent applications of cryptocurrency. So first of all, Visa backs the first ever credit card to offer Bitcoin. Second, Tesla purchases $1.5 billion in Bitcoin and plans to accept it as payment. Third, Wealthsimple Trade announces it will allow users to trade cryptocurrencies such as Bitcoin and Ethereum. And fourth of all, when Elon Musk tweeted about Dogecoin, it immediately rallied 37% to a record all-time high. So as I mentioned before, cryptocurrencies are created by crypto mining. So how does it work? So basically, crypto mining uses powerful computers to add blocks to a blockchain of a certain cryptocurrency, for example, Bitcoin. And for every blockchain that computer creates, they are awarded with a few cryptocurrencies. And another thing with blockchains is that they're not, the exchange rate for blockchains to crypto coins are not permanent. So what we have in very common cryptocurrencies are what we call blockchain halving, which happens approximately every 4 years. So how do we know the price of cryptocurrencies? So unlike stocks and legal tender and commodities, all that stuff I mentioned above, Bitcoin is essentially a fiat currency. So what gives it its intrinsic value is the supply and demand. So it is the main determinant of the price. Another main factor of the price of cryptocurrencies are what we call blockchain halving that I mentioned before. So what happens is every 4 years, or for Bitcoin at least, the amount of coins that are rewarded for every blockchain added reduces by half. It reduces supply and therefore it increases prices, as you can see in the graph. So in the first, let's see. So from 2009 to 2012, every blockchain generated 50 Bitcoin. And then in 2013, actually, it halved. So 25 new Bitcoin were created every blockchain. Next slide, please. So as we can see here, 2009 blockchain, it produces 50 Bitcoin. 2012 blockchain, it produced 25 Bitcoin. 2016, 12.5 Bitcoin, and 2020 was just like last year, it now only produces 6.25 Bitcoin. This in turn decreases supply drastically and therefore drives prices up. So, like every investment, there are risks involved with cryptocurrency. And there are many risks, I can tell you that. The first and biggest risk there is with any type of cryptocurrency is its extremely high volatility. It can go up 30% in one day and go down 80% the next. This has actually happened many, many times to many, many different cryptocurrencies. However, there are some benefits to cryptocurrencies. So first of all, the potential to earn high returns is really high. Last year, when Bitcoin was only $10,000, you could have bought one or two of them for $20,000. And now Bitcoin is $50,000, and it grew to that in just a short, in 2 short months, from $10,000 to $50,000. 2 months was all it took to go up 500%. Second of all, Bitcoin is cryptocurrencies are virtually untraceable. This is kind of a double-edged sword. So you really have to be careful on what you do with your cryptocurrency. There are some, how can I say it? There's
illegal activity.
Exactly. Because since cryptocurrency is virtually untraceable, many websites on the dark web accept cryptocurrency as its method of transaction.
It's very, the increased popularity of it has also like a lot of demand for it is because that it can bypass a lot of government things that are in a very, very illegal way. So some people are using it to hide their money. So that's very, very illegal.
Yes, please don't do that. Next slide. So now we know how cryptocurrency works and what cryptocurrency is. So how do we trade cryptocurrency? So first thing you want to do is you want to use a reliable trading website, such as Wealthsimple or the Chinese trading website Huobi, which I would recommend you to use Wealthsimple first. Second of all, you can purchase cryptocurrency in decimal amounts. For example, I can purchase 0.54 Bitcoins, which is worth like $25,000. If I want to purchase like 0.1 Bitcoin, it'd only be $5,000. And fun fact, you can purchase as less as 1 Satoshi of Bitcoin, equivalent to 1/1,000,000th of a Bitcoin. Fun fact. And on top of that, there are a variety of cryptocurrencies, such as Dogecoin, Litecoin, Ledgercoin, etc. But the 3 main ones, in my opinion, would be Bitcoin, Ethereum, and Litecoin. Next. So unlike stocks and commodities, cryptocurrencies can't be stored in centralized banking systems. So instead, they're stored in really, really heavily encrypted addresses in the blockchain. So there are 2 ways to store cryptocurrency with this blockchain. So first of all, you can create an online cryptocurrency account, such as Wealthsimple, Huobi, or Coinbase, or you could use a physical cryptocurrency wallet, such as a Ledger, Trezor, or KeepKey.
So when we're talking about risks for Bitcoin, one main risk is malicious websites. Because keep in mind that Bitcoin is just Bitcoin, your name isn't connected to Bitcoin. It's not like a bank where you put that money and that money is yours under your name. Bitcoin, you have to store it, you have to be careful and store it on a website that is very, very trustworthy. Such as recently, Fcoin has been a very big scandal where Fcoin closed down, it still owed their users $125 million, took that money and left. And the problem is that since Bitcoin is virtually untraceable, they can't get that money back from the Fcoin like they would in such as a real bank where a government would use lawsuits and to take that money back. So cryptocurrencies are very big targets of these Ponzi schemes. So to mitigate these risks, you should use a physical cryptocurrency wallet. Because a physical cryptocurrency wallet, it's stored on there. It's not stored on any website. It's much safer than using an online account. However, you do have the risk that you might lose your physical cryptocurrency wallet or someone might steal it from your house. And it's important that you do your own research. Don't trust random people on this internet because I think I trust a lot of people here scroll on these financial Instagram accounts talking about investment and those. You always see those comments that say, "Hey, I invested $5,000 in Bitcoin and I made $50,000." That's scam. Do your own research. There's a lot of scams out there regarding Bitcoin, especially because it's virtually untraceable. So those are the risks within there. So that marks the end to our presentation today. So we have some reflection questions for you. So number one is what are blockchains? Second one is what are some benefits and risks of cryptocurrency investments? Number three is how do you trade cryptocurrency? Feel free to type your answers in your chat and we can go through them together. Also, one thing I would like to mention is to connect it back to our other seminars where we talked about stocks, options, shorting stocks. I want to give you an overall range of like the risk of each thing. So out of stocks, cryptocurrency, and options, I would say stocks is one of the lower risk ones as the volatility is much smaller, especially when you're buying into larger stocks. But then when you're looking at cryptocurrency, I would put it in the middle of options and stocks. So cryptocurrency, there's high volatility, but due to the big amount of popularity in the market right now, the prices have been more stable in comparison to options, where sometimes options are down 70%, 80%, or up 80%, 800%. It's like in the past day I was looking, GameStop suddenly went up. The options expiring the day after went up 7,000%. But then when we're looking on another hand as well, you're seeing some options dropping 99%. Bitcoin is not as volatile as options. So we're seeing some answers that are coming into the chat. So let's go over them together. So number one with number two, Jeffrey. So Jeffrey, some risks. Cryptocurrency can be very risky because its prices can change a lot in a short amount of time. Yes, that is definitely because their prices are so volatile, such as in March, we saw Bitcoin drop from 10,000 to 4,000 in just a few days. But on the same side, Bitcoin went up from 20,000 in around November to right now is around 50,000. So yes, there's pros and cons about that. That's what I'll say. And when we're looking at yes, so then Jerry. So Jerry says blockchains are created by powerful computers which are rewarded cryptocurrency. Yes. So that is the mining part of there where you are rewarded the cryptocurrency. That's why some people mine Bitcoin.
Yes. To add on that, blockchains, back when many cryptocurrencies were first created, many of their hashes or the computer, quote unquote, computer problems they had to solve were very simple compared to right now, because the blockchains back then offered a lot of cryptocurrencies. And since those cryptocurrencies weren't worth that much, the blockchains were a lot easier to solve. So anyone with like a laptop computer could solve a Bitcoin blockchain. But now, since it's the blockchains have halved, like from 50 to 62, 6.25 Bitcoin each, the hashes are a lot more difficult to solve. That's why they need very powerful computers nowadays to create those blockchains and mine their Bitcoin.
Yeah, so that's why if the prices don't go up, not a lot of people start mining. But now, since the prices are up so much, people continue to mine despite the halving of the cryptocurrency. Yes, Sean. Yes, your transactions are anonymous. Yes, that is both a benefit and a risk over there, depending on what you're using the cryptocurrency for. Yes, Jeffrey. Yes, you can trade cryptocurrency on Wealthsimple. Yes, you can. So, cryptocurrency you can buy it through Wealthsimple, but Wealthsimple charges a high currency transaction fee. So there are some pros and cons there, but it is very safe instead. Yes. So Jason, risks, lots of online scams. Yes, a lot of online scams due to Bitcoin, such as one of the most recent viruses in for computer viruses when they took hostage of your computer, they required payment in Bitcoin. Do you know why? It's because Bitcoin is virtually untraceable. Once they take you transfer that Bitcoin over, they can't find whose Bitcoin wallet that is. They won't find who created that virus and who's getting that money. Yeah, so Jerry, yes, cryptocurrency is volatile but can lead to a lot of profit. Yes, its ups and downs are very high. If you do it right, then you'll make a lot of profit. But if you do it wrong, a lot of losses. So there's always a give and take with everything. So George, yes, uh, yes, it's untraceable. So very good. Yeah, so I think that marks the end of today's presentation. So thank you so much for coming to today's presentation. Uh, next presentation will be most likely 2 weeks from now. So just the week before spring break. Thank you.